Dead man. Dead man walking. Dead man walking here. Dead man.
Good evening. It's Monday, June 28th.
We got a dead man walking here.
Yes, we do have a dead man walking here. It's the stock
walking.
market. And today was another, what I would say is a bearish day. You could be forming like a bear flag. Basically, the hourlies, the 15 minutes, they kind of resolved their oversold conditions, and now they're in overbought territories. You can't go straight down. We haven't had extreme panic. It's been kind of a grinding sell-off right now, and I think that the next leg down is going to be more intense because the VIX is at a higher point right now, and basically there doesn't seem to be a lot of buyers willing to step in, and at the end of the day we had a pretty intense push down, and I don't really see a whole lot bullish right now. Matter of fact, I don't see anything bullish, but as far as on the SPY, the S&P 500. But anyway, we're going to take a look at some charts. First, I'm going to look at the SPY 60-minute chart, and you know, this chart I've had up last week during my videos, and as you see here, this is like this is a broadening top formation on the hourly, and you can see we rallied up to 113 from the 104 area. You could have had a potential double bottom here, and the support would have been in the 111 area. And as you see, we tested 111, you know, for a while, and then we eventually cracked through, and then we ripped down, and we went down. We bottomed at in a high 106. I think it was 106.77, and today we closed at as you see there, 107.53. Now, when we were at 106.77, the stochastic, as you see on the hourly, was down here. So now we've gone up only about 80 cents now, and the stochastic has already turned down. It only went up to the 60 area, and the black is 59 and the red is 62. And as you see here, the MACD, there's a pretty large negative divergence here, and you could have a cross below the zero line, which you know, you got to take notice of this on these charts. Like if you see here during this sell-off, you have a cross below the zero line, and look at where you're at. You're like way up here at 115, and you wind up at 104. So when you have a cross below the zero line, it just means that there's, you know, pretty much everybody knows it's time to sell, and that's kind of what I'm anticipating is going to happen in the next few sessions. I think it's going to happen before the end of the month. I have a feeling that we're going to make new lows in the next 2 days. I've been saying this since the beginning of last week. We're roughly 35 points off of the bottom, but when the stochastic only turns up, you know, halfway like this, or a little more than halfway, and comes down, you tend to have, that also tends to be a sign of extreme weakness too, because you couldn't even get to the overbought level. I mean, you could have, in theory, you know, the market could have bounced maybe to the 109 level and then, you know, churned around, but it didn't seem like there was enough buyers even to really prop it above the 18 period moving average for the hourly. So we're below all the moving averages now. Another bearish thing to notice is that this 45 is about to cross the 100 to the downside. And another thing to notice there, in the recent past, when you had that happen over here, you were at 119 when you had full bearish alignment, and you didn't cross back. I mean, you know, so you wound up going down to the 104 area, and then you didn't wind up getting a bullish alignment until prices were around like 109. So now that you're having a crossover again to the downside, and you know, plus the stochastic only turning up to the 60 area and then turning down, and then the MACD also having a potential crossover below the zero line, you have a combination of you have the possibility of a pretty intense sell-off. And there's other indicators too that I'm going to go over in these videos, but there's and the RSI too. If you look up here, you can see the relative strength only got into the 40s, and now it's turning down again. So that's pretty much classic bear market action. And being that this is a short-term chart, but it's an hourly, so it's not this chart covers a decent amount of time. Even in the area that I have on here, it's like a month and a half worth of trading. So I'm anticipating that this is gonna, well, the stochastic's already rolled over, but I'm anticipating that this MACD is gonna roll over too and cross, and take out all these potential positive divergences. A lot of people were saying that we're going to get a bounce here because they saw these positive divergences. Just because you have a positive divergence doesn't mean it's going to actually pan out. Just because it's it's a positive divergence now, but it won't be in a little bit if it crosses down and makes a new low. And right now you got the histogram ticking down too. So, and you're below the 18 period. So, and the Bollinger Bands are tight. So there's a good chance we get a gap down tomorrow morning. So that's what I would be looking for in the SPY. And I'm going to look at the 15-minute chart here too. And if you drew the lines here, you could see that we breached the uptrend, the short uptrend line. This is the 15-minute chart. And today, what was happening? Well, basically, what people have been playing is since the 23rd. You see where the MACD is? It's at a low there, and you've had higher highs. Well, you had a higher high here, higher low, higher high, higher higher low, and now you had a bunch of churning in here, and now it looks like it's ready to break down again. And you see the last candle was a bearish engulfing and very high volume, and all below all the period EMAs again. In this chart, you do have the 18 period above the 45 period, but that could cross in the first candle tomorrow. So this chart is also signaling some potential warning signs. You also have the stochastic that only turned up into the 50s and it crossed down, and it's basically just showing a breakdown. Okay, the other time frame that I would look at is the I usually don't look at this chart too much, but today, because we're such churning, and I wanted to see if this rally was really going to pan out, because I'm gauging basically whether I should take out and reload, because I've been hearing from traders that are anticipating a rally here, and I wasn't seeing it, and then I'm saying I see the possibility, but to be honest with you, the action is just signaling more of consolidation before another leg down than a break to the upside. And I think probably a lot of people that are bullish probably took out because of if you look at this action here the last 15 minutes on the 15-minute chart, you just have one huge volume line here, but you see the action you sold off from like 1790 to 1750s, and then the next candle actually broke this uptrend line that's been going on since only since Friday. This is a 5-minute chart. So, and as you see here, there's negative divergences piling up. So, and it looks like it's cracking to the downside. So, you're seeing a lot of negative things, and it looks like the market is breaking down. I'm going to go over some other charts in the next video, and just hang tight.